Credit usage is also very important. That's going to be like the second most important
Yes.
thing when it comes to credit. And a
Yes.
lot of people don't understand this because credit usage is only calculated with credit cards and revolving lines of credit. So if you have loans, an auto loan, student loans, a mortgage, any sort of installment loan where you pay the same monthly payment every month until that balance is paid off, that is not factored in or calculated into your credit card utilization. Your debt to income is affected by all of those accounts. So of course, if your goal is to buy a house, don't buy a car yet. Don't
Yeah.
buy a car that is going to report to your personal credit. That's where business credit comes into place. Build your personal credit up and get a car in your business name that doesn't report. That's one of the biggest mistakes people make. And then they, get this fancy car, get a Mercedes, and then they go to buy a house. And guess what? That loan for your Mercedes is affecting your debt to income. So,
Absolutely. So
that's another thing. But as far as the revolving credit lines, it's just credit cards and lines of credit. And we want to keep those below 10% of the available credit limit. So if, for simple math purposes, if your credit card limit or your credit line limit is $10,000, you want to keep your balance due under $1,000, especially when it reports to the credit bureau. So there's two dates, and I've gone through this in my credit masterclass too, but there's a
yes.
statement date and there's also the due date. So you want to pay your credit card down to zero. No need to leave a balance because we want as many cards at a zero balance as possible, especially when you're going after funding. Okay. But you want to pay the credit card 5 days prior to the statement date. So that way, when it reports to the credit bureau, this credit card will report at a zero balance. And then you can do whatever you need to in the next 30 days to, spend, pay, do whatever. But again, credit cards, you need to look at credit cards on the personal side, like decoration, like little
Yeah.
trophies, right?
Yeah.
I've
Yes.
got so many high limit credit cards, 17,000, 30,000, 38,000. I keep them locked and at zero. Why? Because they're decoration to help me build a strong credit profile. So that way I can qualify for equipment. I can qualify for business credit. I can qualify for properties, any sort of opportunity that might come up. If I want to buy a multifamily property, and I can qualify because my credit is good, my income is good. And guess what? 3 of those units are going to produce income. So that's even more income that you can use.
Yeah.
But I know it gets confusing.
It does. It gets,
Bottom line.
but it's still, no, but it's worth, the information is worth having.
Oh,
And also, I
yeah.
did want to say to that too, is that also sometimes people get denied and they don't realize it, that we talked about data, that data shows. So
Oh, yeah.
the lender can see that your limit is 500, but your highest credit used was $700. So that looks like you either went $200 over your
Mhm.
limit, or your limit was higher and they dropped it due to some BS.
Right.
So just so you know, you may think, oh, that was a year ago, or that was 30 days ago, or 40 days. They're watching.
Mhm.
Data is what's making those decisions. And they need to be able to assess. Just how if somebody wanted to borrow money from you, you want to assess, can this person pay you back? Have they
Right.
paid you back? The
Right.
banks are the same way.
Mhm.
They're the same way.
Yep.
So I just
And
had this.
they're even more strict because their underwriting department knows what to look for, and if they
Yeah.
see any sort of financial risk, either you're going to be paying a astronomically high interest
Yes.
rate,
Yeah.
and or you're simply just going to get denied. So, a lot of people, they pull the trigger too quickly. You have to make sure that when you are applying for credit, new credit, funding, credit card stacking, whatever,
Yeah.
pretty much all of your credit cards are at a zero balance because no bank out there wants to give more money to someone that's over leveraging their credit to begin with. Okay.
Yes.
And if
Yeah.
you have paid them off, you have to make sure that they have updated on your credit reports. Just
Definitely.
because the bank shows a zero balance
Yeah.
doesn't mean your credit reports will show a zero balance.
Yeah.
So you have to make sure that when you look at your credit report,
Yep.
You see zero because that's what the lenders are going to see.
Or vice versa. I've known
Mm-hmm.
some people, like, literally, sometimes it takes the bank to update. You'll clean them all up and they're so excited. Their score went up 100 points. And sometimes I don't know what that magic number is. People feel like they got to ball out and apply for everything.
Oh
Then
man.
they go and apply for things and they get denied. It's like, hey, the banks sometimes have to catch up too. You see it, but it may take them another 30 days for the banks to even see and confirm. So you, again, it comes down to education and
Yeah.
information that all banks are not the same.
Yeah, no, they're not. And that's why credit is so hard to navigate because there's so many gray areas and there's so many banks out there that we have never heard of that can literally change our lives. So,
Yeah.
and it's just comes down to being educated. Like I had no idea about this stuff even when I was 30 years old. Like I always
Oh,
had
yeah.
credit,
Yeah.
but I didn't really know too much else, And that's really a big mistake that I wish I would have invested earlier on, because had I invested in my credit and understood it and really became serious about it, I would have been that much more successful. And, now here I am teaching you guys and sharing my experience with you guys so you don't have to make the same mistakes that I made because they are costly and you can start now. Even though you don't need credit, you're like, oh, I don't need credit. Great. That's the perfect time to start when you don't need nothing.
Yeah.
Because
Oh,
when
yes.
someone comes to me and they need a car, they need a house, they need this, they need that, they need 100,000, chances are they're probably not going to get it right then and
Nope.
there because they've already tried and they got denied.
But
So,
they're going to go out and invest double or triple the money to work with a snake oil. Was it called snake oil salesperson that's going to give you all these promises and tell you
right,
yes, yes,
right.
nothing they could do. If
You
anybody
guys want to
tells
pass
you,
up the community paying less than $100 a
yeah,
month to go pay, somebody, this
3,000,
guru
10,000,
on YouTube.
15,000. I've had it happen so many times, and they'll come back and say, "Oh my gosh," or they'll go and make those moves and say, "Could you help me get out of it?" It's like,
Right,
you can jump down a hole and I'll be more than happy. But if my rope only goes this much, baby, I can't come get you. I
right,
can't come get you. Sometimes people do, like, anything can be undone. Like, I'm not saying go and just, off it.
right.
Things can be saved and preserved. But when
Mm,
you just jump unnecessarily, anytime that you're desperate for something, I've never seen desperation work out
no,
because
no.
people can sniff it. Even if you like
Yeah,
somebody in a relationship, oh, I want him, I want her, I love them. They don't even think about you. Credit cards, oh, I want this, I need this. The underwriter is resting bitch face. Too bad. You know what I mean?
right.
Anytime you have to jump out of the window and come outside of yourself to want something so bad out of desperation, I've never seen it work right. I've never
I
seen it
haven't either. And that's why I tell you the perfect time to get funding and to get credit and start working on your credit is when you don't need nothing.
at all.
Because you'll be set up for success when you do need something. And who wants to pay, 20 something percent on an auto loan? It just doesn't make sense. You're paying three, $400 a month directly to interest.
I almost passed
Makes
out when you said on the auto loan. I thought you was gonna say a credit card. I said maybe some credit cards I could. I don't want to understand it, but I can understand some people have to. But an auto loan,
yeah.
honey, oh no way.
Yeah, and there's just so much to it. So
Yeah.
join the community, guys. We're gonna get into the rest of these data points. The
Yes.
next one that we have here is length of credit history, and this is 15% of your credit score. But you know how there's different models. There's the FICO model. There's the Vantage model. Now both Vantage and FICO really hone in on the credit usage and on time payments. Okay. Those are two of the most important things. Those two things together, that's half the battle right there. And guess who has all of the power to do that? You. We have no power in regards to your payment history, and we have no power over how you use your credit cards. You are the one that has to be disciplined to pay on time, to keep your credit cards at a zero balance. What's the point of having credit cards if you can't use them? You have to relearn everything that you once thought that you knew about credit. Credit
Yeah.
cards are for decoration. Credit cards are to leverage the bonuses and to protect yourself. But you don't spend what you don't have. You use your credit cards like a debit card. You pay your cash to your credit card. Okay. And
Exactly.
that way it builds credit and you can grow your credit limits over time. So
I always
credit
tell
history is
people, oh,
very important.
I always tell people anything, like especially they don't haven't had credit education, anything you know about credit, do the opposite. Because some
Yes.
people think, oh, if I make a late payment, then I can let it go for 3 or 4 or 5 6 months. No, pay the late payment. Anything like don't make the late payment. Excuse me. Don't let it go
Right.
to 30 days late. So it's just like anything you think you know. Oh yeah, I can apply for multiple cards all at one time and stuff
Mm.
like that. It doesn't lower my history. It doesn't do this. Who cares? Or if I go to a car dealer, yeah, these inquiries aren't going to matter that I got 20 inquiries for one car and then now my
Right. I have
score.
a shopping period. They said I have a shopping period.
The
Oh
period, the
man, if
period
it
means
only
stop.
worked.
The period means stop. The sentence is over. It's done.
Right.
It's done.
Right. And
Please.
you know, the history is not as easy as we might think it to be,
Yeah.
because when it comes to history, they really want to see like a 4 or 5 year history. Okay.
Yes.
And the more new accounts that you add to your credit report, the lower your average history is going to be. So say, for example, I have student loans, right? And obviously the student loans are going to be, probably some of the first credit accounts that you ever opened when you
Mhm.
were 18, 19, 20 years old.
Yeah.
Those student loans are giving you an immense amount of history, especially if they're all positive. So
Yes.
when you add new accounts, it's like it's going to bring your history down, but not so much, because you have these super aged history trade lines, which, trade lines just a credit account. And then you've got a couple of these new ones. But say you didn't have any sort of aged and you just add a bunch of accounts, your
Yes.
history is going to be at pretty much zero. Okay. Because
Yes.
it goes off of average, right?
Yes.
So we want to just pay on time so we can get that history. Our goal is to have at least 24 months of payment history with all of our accounts, okay, especially credit card accounts, because if you've shown a 24-month history of paying on time, you're not a risk,
Okay.
okay? And that's what the banks like to see.
That's right. They're always assessing risk. If you seem
Yeah,
risky, and I always tell people don't understand the underwriter. I always say rest in bitch face, but it's not that they're bad. It's just that they're numbers. They need
right,
to protect the bank's money.
right.
So I always tell people if there's a bank that you're interested in, credit card and stuff that you're interested in, get to know the branch manager. Get to interact
Yeah.
with people. People like people who they can connect with, or they feel good with, or
Relationships.
they're key.
Yeah.
They're key.
Yeah.
So do that. Do that.
I agree. I agree wholeheartedly, because those relationships are invaluable. They can tell you, hey, look, it's probably not a good idea right now, just based on what you've told me, you know?
Mhm.
But even, the branch folks, they don't necessarily know a lot about credit,
Yeah.
because they're not the ones that are in the underwriting department. They're the ones that are bringing people in for sales. So they're kind of like the salespeople for the bank. They're also there to protect the bank. But at the same time, if the bank is not making sales, they're not giving credit cards, they're not giving loans, then they're not making any money. So their job is to get people approved. But you have to go bank ready. You can't go disrespectfully. Okay. Don't depend on them to help you fix your credit. That's not what they're there for.
Yeah.
They're there to deal with real professional people who already have their shit together and say, look, here's my situation. I need $50,000.
Yes.
Okay.
Yep.
They can help you get that as long as your credit report is set up properly.